The Fed raising rates and the uprising of COVID overseas are rattling the stock market. Let's find out what traders have to say. Joining us now with that, Michele Schneider, Director of Trading at the MarketGauge Group. Thanks so much for joining us, Michele. And the Fed speak lately is signaling really aggressive moves in raising rates. What do you think?
Well, yeah, I mean, it's if you put it all together, what you have right now is a situation where the Fed is obviously, and I guess to their credit, although we all know that they're a little bit behind the curve, transparent. And they're telling you that if things get out of control, this is what we're prepared to do. And of course, we've seen those yield curves flatten. We've seen mortgage rates go up. And on the same token, you do have still retail investors coming into the market because there's this prevailing theme that if the Fed does actually become more aggressive and drive the economy more towards recession, they're going to come back and save the day with more quantitative easing. So I think a lot of people are just not really trusting the Fed's aggressive talk. And at the same time, the yields are telling you that it's real. And then, of course, now with COVID reemerging in China, we're going to see shortages again. Maybe the initial reaction would be less demand in some of the commodities. But when they come back, I think we'll get this new surge of inflation. So that's really where the Fed is going to have to act as the economy is declining to control the inflation. And will they? We don't know. So meanwhile, the market has rallied. It's rallied sort of a midpoint to where, basically from peak to trough. And it's sitting there waiting for some kind of sign. And that's really what's going on here. Meanwhile, commodities have taken a dip. I still think that you should be a buyer of the dip in commodities and be really cautious with your equities. If you got in after the big dip and you have some profits, you should probably at least be raising stops at this point and maybe even taking some profits.
What's your trade of the day, Michele?
Well, last week, I will brag a little bit here. We gave you BITO, which was tied to Bitcoin. And so that was trading at 25.50 area, and it went up to close to 30 today. So that's a perfect example of getting a great opportunity to take some profit off the table, which we did. Cryptocurrency continues to look good, so that's a plus. But in the meanwhile, we're very cautious here. We have a few things on our radar. We're still looking at medical devices area, things like that could grow. But we're also looking at Garmin, which compared to some of the other transportation stocks, like, so let's say GoGo, which has internet, Garmin is what is used in most planes, or all planes actually, for autopilot, and it's been under a lot of pressure. It looks like it could be flagging, and I'd say if it gets through 117.50, we'll probably be a buyer at that point.
Thank you, Michele, and have a great rest of your week.
Thank you, Angie.
Go to businessfirstam.com for where to see our show on TV.